The stock market sell-off has really accelerated. So has the selling of a lot of commodities, bitcoins, etc. The graphs I'm about to show you today might surprise you in a negative way. So let's start here with MicroStrategy. This is a company that loves to buy a lot of bitcoins. That's their the whole thesis of the company is to buy more and more bitcoin, and every time bitcoin nosedive, they just buy more and use leverage to basically increase the number of bitcoins they own. I think they own like 6% of the bitcoins that is available for purchases. And yeah, this company has made a lot of people rich, and the CEO has been around talking a lot about his thesis around Bitcoin and how it's going to 1 million, etc. Um, but yeah, at the moment we see a nosedive here from 400, almost $400 down to $102 when I took this screenshot. I guess we are even lower now, maybe, because Bitcoin is not feeling too good today, and I'm not sure how much MicroStrategy can take in terms of the downturn of Bitcoin. I haven't analyzed that yet, so I don't know how strong they are in terms of the loans they have, etc. So it will be interesting to see what's happening here. So I guess this is a really dire situation for MicroStrategy at the moment. So basically, MicroStrategy is a risk-on play, and many has used it to have that exposure to Bitcoin, but they might not have enough money to buy Bitcoin, so they have bought MicroStrategy instead. Well, if they thought that MicroStrategy was a hedge against a downturn in market, and yeah, when a lot of stocks going down, Bitcoin is supposed to be very stable. Well, I guess that was the wrong analysis. Next one I have here is Adobe, and for Adobe I have a 5-year view, because it's very telling that such an amazing company with the increasing cash flow over time, they had everything going perfect for them around 2022. Well, in 5 years, the stock price is down 44%. So this company, in terms of return to their owners, return on equity, etc., has performed terrible. And these show you that you can invest in quality companies and just keep hold on that company over time, and you can still lose a lot of money. And lately, they have also been struck hard in this marketplace. And yeah, I've actually heard some people going out there and buying Adobe now because they feel like this is such a quality company in terms of balance sheet, finances, and their long-term plan. But in terms of market cap at the moment, they are getting hit hard, and they have not performed for their shareholders in a long, long time. Maybe if you swing traded this one from 2023 here up to 2024, you made some money. But yeah, long term, it has not performed very good. Here we have Bitcoin. I know Bitcoin has been a risk on play for a long time. Some people say it's a hedge against inflation, but at the moment we have seen Bitcoin perform very good when the market has performed good. When we have a lot of gains in the Nasdaq, Bitcoin has had even more gains, so it's been a risk on play. But now, when we have a downturn in many middle-sized companies and some of the big caps also, especially in tech and AI, Bitcoin is doing what it usually does, nosediving faster than a lot of companies. So it's like a reverse risk on here for Bitcoin in this moment in time. So it's still behaving kind of like something you trade, not like that long-term hedge against inflation. So I guess we will see what happens with Bitcoin the coming 5 to 10 years. But at the moment, I guess a lot of people are feeling the pain here, because if you had 125k per Bitcoin and you had a lot of Bitcoins, you probably regret that you didn't sell some of it at the top there. You had at least a couple of months here during the summer, and if you did sell there, you could use that money to buy in now at lower levels. So yeah, this is really messing up some portfolios, and some people, they actually don't have money to increase their level at this time in place. So if you're cash heavy, you have a lot of opportunities here, but if you're not, you have lost a lot of money here and you have margin calls, etc., you can't make use of this situation. Here we have AMD, and this is a company I've talked about in this YouTube channel. It's one of my favorite long-term play in the stock market. They just had their Q4 of 2025 quarterly reports, and it was a tremendous quarter. They had over $10 billion in revenue, outperforming the estimates of Wall Street. They have long term their upcoming GPUs that are closing in on Nvidia, a lot of deals with Oracle, OpenAI, etc., and probably 35% annual compounding revenue gains. So I guess in the long term, I can see this market cap triple just in 4 years. But at the moment, despite the best quarter I've seen them ever do, outperforming on all levers, stock markets do not want to touch this stock at the moment. Everything is down. You can see here, despite being quite steadily here on 250, and I think that is a very solid ground. And they, according to me, at least within 2 years, it should be a lot higher. No, not at the moment. And the thing here, when you see so many stocks fall, traders or maybe some institutions that have a shorter time horizon in investing than I do, they might feel like, okay, but AMD is still, if we look back here for a year, it's still a lot of gains here. I can take some money from my positions in AMD and I can scoop up some bitcoins. I can scoop up some Adobe or some other company that they want to push. So that could also be a problem for AMD, despite having the amazing earnings that they have. It's such a long-term play that at the moment, the 1 year horizon, there are a lot of opportunities out there, and that can also put some selling pressure on the stock when big institutions and hedge funds, etc., readjust their portfolios. Snap, in an environment like this, companies like Snap that has a problem to steadily increase their cash flow and especially their earnings, their real EPS, they that type of tech stocks at the moment, nobody want to touch it. And I mean, every young person out there are using Snap at the moment, even though I think it will be some headwinds in terms of, for example, in Europe, they want to make the age higher for social media, etc. And Snapchat obviously has a lot of people around 13, 14 years old. They start with this. So yeah, it's a hard play long term also, but it's not just, you can see that it's from very, very hard drop from 7.5 to 5 here. So I think I have not analyzed the market cap and the earnings potential here and the revenue, but if you do have your eyes on Snap and want to buy, it's the lowest levels we have seen for a long, long time now. And yeah, PayPal, or as another, I did see a video, they call it Painpal. It's been a long time. I think it was 2020, the winter 2020. PayPal were like $200 a share or something, and they are still making good money, good deals with Amazon, etc. But this stock, despite having amazing cash flow, it just can't get just getting lower and lower and lower. And at this market at the moment, Wall Street, retail investors, institutions, no one wants to touch PayPal. They once again has a new CEO, and yeah, obviously the stock should not be priced under $40 a share. So it's just a strange market out there. It's artificially, I guess you could say, artificially forced down a lot of the companies. They are getting a very attractive valuation long term, but obviously a lot of people and institutions want to make money in the coming years, and that will obviously be another situation than me, who might see 15 years forward. ServiceNow, this is a SaaS play, service software as a service. There are a lot of thinkers out there, spokespersons for hedge funds, or YouTube financial people on YouTube, etc., that has stated that maybe Wall Street has their eyes on other things than software companies at the moment, because some of the AI companies like OpenAI, Anthropic, etc., has performed some leaps in terms of their AI coding capabilities, etc. And the thesis here is that these type of companies might take market share from companies like ServiceNow, for example. I think that is a very, very short-sighted analysis of the situation. I I would love if I had the money to just pour in money in ServiceNow at these levels, because I believe in the CEO and the company and the potential long term. I don't think companies like ChatGPT, OpenAI with ChatGPT, or Anthropic with Claude AI, etc., are really some going into the moat of ServiceNow. So yeah, I think AI is probably helping software companies more than not. If they could decrease the amount of people they use in coding, that would, I guess, be a positive, because they could have more cash flow, more earnings, etc. And if they can't use the AI tools that way, then they obviously still has a great spot in the market at the moment, increasing revenue every year with 20%. So win they win either way. So yeah, but still, no one wants to touch this stock. So a lot of people have lost massive amount of money on ServiceNow. So despite the company increasing earnings per share, market share, revenue, etc., performing good over time, still you can lose loads of money. So that is something you can learn watching this. Microsoft is supposed to be rock solid company in this market. No one wants to touch it, despite the best balance sheet out there, the best earnings. The only thing that is not the best at the moment is the cash flow, because they are investing a lot to having that long-term potential in their services. But that is obviously something I'm not too afraid of. So I still believe in Microsoft long term. Obviously, it's a giant, and yeah, but they are, I think, also partly a SaaS company, and that is why they are getting hit. I think it's kind of a rotation. I will come back to that later. So what we see here is probably an AI tech sentiment shift, and as I said, software as a service, SaaS companies like CRM, Salesforce, Microsoft, ServiceNow, Adobe. No one wants to touch these companies at the moment, and their valuations are getting very, very juicy if you have cash on hand and want to invest in amazingly ran companies that has increased their cash flow over time now. And for example, in terms of AI, think about CRM. They have their Einstein, they call that the part of their offering that is much better than anything out there. And then some random analyst out there are saying, well, I think Claude AI is better, or GPT is better, and it's not even the same thing. So I just think that some of the discussions at the moment is ridiculous. What I also think we are seeing is a repricing of the key metrics. So if you did a sort of a sensitivity analysis, and you did like tweak what you are willing to pay for earnings, for sales, for cash flow, um, despite the companies performing the same way, meeting expectations, increasing cash flow, earnings, etc., you are willing to pay less for every company. So maybe you were before you paid 30 in terms of price per earnings. The number was 30. Now maybe it's 25. That means that the stock price will go down despite nothing fundamental about the company has changed. So I think that is also a thing that we should think about in the moment. And obviously, long term, the repricing can swing the other way. So if you just relax and chill in the boat, probably that's a good idea, and not try to just panic sell, etc. So do your own due diligence in these moments. That's more important than ever. But I won't force you to do anything. Obviously, it's your way here, and it's your money. You need to feel safe. That's it. Um, we also have the new Fed man in Federal Reserve coming in, Kevin Warsh, and I think that has also been a cataclysm in terms of getting this situation going. In another video, I talked about gold and silver sell-off, and I think this is a kind of a continuation of that. We do know that Kevin Warsh is a man that is uh, the bank's man. It's not the man of the government. It's probably someone who wants to keep the marketplace going and not having the interest rates levels too low, like getting pushed around by the government. So he wants to be independent, and I guess the market might have priced in a bit more rate cuts. And when Kevin got elected here, maybe the pricing at Wall Street was too aggressive in terms of rate cuts, and now they feel like, long term we might have a slowdown in the economy, and we won't have the rate cuts because they want to take responsibility in terms of other metrics also here, and not get pushed by the government um, to decrease or slash the rates. So that is also something that I think a lot of analysts has put into their models. Also, we have profit and valuation concerns. Obviously, we have seen massive outflows in Bitcoin. That is troublesome. Such Bitcoin has performed so good over time. We haven't seen this kind of drop in ages, and the trust will obviously be hurt short term here. We also see a broad deleveraging in gold and silver, and it's supposed to be the safe play. But when everything is down, obviously you want to sit on cash. So when things go even lower, you can hold on that cash and just find the opportunities. So everything gets sold, and we will have lots of margin calls both for gold, silver, Bitcoin, stocks, etc., and that just push get that downward pressure on everything. Also, you should not forget that despite not everyone might not sell, but it's the latest price that counts when you look at all the graphs. So despite the company being down 40%, that just meant that someone out there was willing to sell at this moment in time 40% less in value than it was maybe 3 or 4 weeks ago, despite nothing changed. That doesn't mean that the company long terms, that value is going to change. Think about that. Also, we have a lot of uncertainty in terms of macro environment. A lot of, uh, you know, we have some wars going on with Ukraine situation. We have the Middle East situation. Also, we have this the upcoming situation in USA with a specific island that a lot of people are talking about, and the things going on there, and the trust for leadership in the country maybe going down, and that is also a distraction. And yeah, we have the margin calls, etc. That are accelerating. So a lot of things here that are affecting and pushing this down. But what I want to tell you in my final synthesis here is, well, obviously we have a lot of moves here, but all of them is not fundamental. A lot of these companies has performed good this year, better than ever. The earnings calls has showed us investors, if we listen to them, that the next year are also going to be good. For example, Microsoft, AMD, etc. Despite that, some of these companies are down a lot, meaning long term, if we're still going to hold on to these companies 15, 20 years, maybe it's time to see, if you have cash on hand, what you can do. But if you remember how it felt like during 2020, during the pandemic, it's very, very hard to go in and buy that when the stocks are going down, because just in a few days it can decrease even more, 20% more. So you have to just do your own due diligence in terms of how your psyche works and when you enter stocks. Also, long term, I want to believe that fundamentals matters, and I do, even though I think some stocks are broken where fundamentals do not matter. Some stocks are backed by um, specific people with a lot of money, a lot of power, or maybe a lot of belief. So, for example, Tesla, the fundamentals is not there anymore. Palantir, the fundamentals is not there anymore, but the market cap is massive. I think Micron, in terms of being not having that innovative of a product, the stock price has really increased fivefold, and that stock is not getting slashed here despite a lot of sell-off. So I think some of the stocks are behaving a bit strange, and that is kind of making me feel that it's kind of a strange situation in the stock market. But if I look through a bigger perspective, such a big part of portfolios and indexes are going down. So I think a lot of these stocks will actually bounce back. Not maybe not like tomorrow, but in the coming year, so to speak. And they do that because they have good earnings. If you compare the price per earnings over time, the price per sale, the cash flow, the return on equity, etc., the R&D of the companies, the buyback of shares. If you do your own due diligence, you can see what companies are performing and grabbing market share, and what companies are going to continue to stay strong. So I would never sell the stock if I just felt afraid. I would always see, has something changed since I bought it? Why did I buy this stock? Maybe I bought the stock, but I didn't analyze enough, and now when I see the stock falling, I readjust my first thesis about the stock. So you have to dip your toe sometimes to see if the thing you thought are actually still in play. And yeah, lastly, what's happening now is not something that is invalidate your investment cases. So if you have a stock, for me example AMD long term, just because the stock is down like 25%, for example, in 2 months, I won't sell the stock based on that drop. I will still watch long term what's going on. So I will, as an investor, I do not get emotional when something gets down or some level are broke in terms of trading. But I think it depends on what type of person you are and how you want to make your money. For me, it's too complicated to be a trader and make money like in 3 months' time. For me, the only way I can beat the indexes is watching like 15, 20 years. So that is my thesis, and I believe in companies that can outgrow their competition, grow cash flow, and gain market share over time. And if they do that and they perform and execute, and I have a belief in the leadership in that company, and they overperform again and again and beat expectations, probably long term, the company, if the P ratio is like 15 at the moment, and then they 4x their revenue and 5x their earnings, probably the stock price is going to get higher. So I still believe in fundamentals, even though some people just say that the whole stock market is a gambling machine. It's sort of a gambling machine, but it's a gambling machine with fundamentals. So yeah, I still believe that is important factor here. Anyway, that was it for today. If you enjoy this type of content, just hit the like button, smash a comment, and write to me if you want me to cover something else. And I'm glad that you're tuning in. I want to build this community with you long term. So yeah, happy times. Let us push through this moment.